Welcome back, traders, to the channel. Thank you for joining me. Ali Casey here from Strategy channel. This video is about making money in currencies. So I don't do a lot of videos on currencies, but this one is really good. It's a portfolio trading currencies, and you can do it through spot currencies or through futures. This portfolio is very robust, built on very simple concept. Now I reached this concept through a seasonality bias on the euro currencies. So I'll show you how to do that, and I'll give you a glimpse of what you're gonna find out in this video. So this is the portfolio, and as you can see, it's highly profitable, highly robust, and I'll show you how simple it is to build this one. So let's jump in. Before we continue, I would like to ask you to smash the like button so Google can push this video to other traders so they can get some value out of it. Now, I did this portfolio based on seasonality analysis, and I use Seasonax app to do this, and I have a link down below for 20% discount on Seasonax. And of course, there is a free version, and you can do a lot with the free version, so there's no obligation to do that. And now that's out of the way, let's start building. So today I will show you a seasonal bias in the British pound. So if we go to Seasonax, my favorite tool to find seasonality and biases in many instruments, stocks, currencies, futures. So let's search for British pound, and we will go with the US dollar. So if you look at this pair, of course we can, let's pick 15 years, let's detrend, and then this one you can take the last move, so it looks better. Of course, it still keeps it in the calculation. It's just visually, it shows you a better representation, just like this one. It's just a visual representation. But in any case, we can see clearly that this is a bias. It looks good. Also, we have this one long side, and we have this one on the short side. So really, the British pound has many biases during the year. But today I'm going to show you something different. You need to think a little bit out of the box. But once I'm going to mention it to you, you're going to start looking for it. You can see that on the start of every month is downtrend. So we look at this one. And so this is January, and visually, of course, you can keep doing this, but I'll show you another trick, which is, let's say if you pick, let's pick January, so 1 to 10, and we can see we have 80% winning on the short side, and then you can just move forward the months, and then this is February, again 67% winning on the short side, and we can move to March, again 67%, and we do April. Now April is 50-50, so let's keep that in mind. Let's move forward. May, it's also very short dominant. June is 50-50, so that's April and June. And then July, it's down. And August, it's down. And September is up, so that's April, June, 50-50, and September has a tendency to go up. And this is not the whole month, we're picking only first 10 days of the month. So this is 60-40, and then November, again 60-40, and then last one is December, which is also. So most of the months, the beginning of the month is a downtrend. So now that we have a visual representation, instead of building a portfolio in Seasonax, and then you can see the results here, of course, we have a better way to do it, which is to test it in SQX or any other platforms you have. But since most of the viewers of the channel are Strategy Quant X users, so let's do that. So it's simple. Let's pick the engine. So I do TradeStation and GBP, and we will pick GBP US, and we'll do the daily time frame, and then we will do one lot. Then for data, I'm gonna test till 2018 January, and we will start from 2008. 7, actually I can go even from 2007, although for futures I start 2008, but let's do 7. So that's done, set. So we'll go short bar and time first trading day using the weekend, and then we will exit 10 days later. So short exit and bar and time, and we're looking for bar day of the month, no shift, greater than or equal to the 10th. And let's run a full back test. And our theory is correct, that the British pound actually on most months, it's actually have a short tendency. So now let's try the other thing, which is we found that April, June, and September's are so and so. So let's isolate those. So we can add that bar and time when bar month is not April. So currently we have $70,000, 130 trades, and 18% drawdown. And if we remove those, so we reduce the trades by roughly 40, let's say around 40 trades. We may make a little bit more money and draw down roughly the same. So I would say it's a good enhancement. And I can see that the curve is a little bit smoother right now. So this is really good. But I'm going to show you another way to make this system better. So this is, if you have seen my other videos, it's not significantly enhancing the portfolio. So yes, it does April, June, and September, but not significant. So let's take them out. So let's start with this again. Now, first trick to do is we are testing on daily time frame. But of course, we have, if you're subscribing to SQX data, then you'll have 1 minute resolution. And of course, you can import data from other platform. So with 1 minute resolution, because you can see now when I see the list of trades, you can see I'm entering always on the second day because it's picking up the first day of the month, then executing the next bar, which is the next day. Same thing, it's picking up the 10th and executing on the next day. So in order to execute, to have better execution, which may be better, maybe worse, I don't know. So, but let's check that. So we can switch to hourly. And of course you can switch to 1 minute, but just I'm making it faster. So I'm going to switch to hourly. And now we should gain that 1 day extra. So right now, see, we're entering always on the second day and exiting on the 11th. And 70,000 and 18% drawdown. And now you can see that is significant. So now we're making 87, so that's $17,000 more. Of course, with almost double the drawdown. But still, it's significant here. And we can reduce the drawdown later, maybe through stop loss, because we don't have a stop loss yet. And now if we click on the time, we can see that we are entering actually on the first hour of the first day of the month. And we are exiting on the last hour of the 10th. Now, this is on the 11th because the 10th happens to be on a weekend. So then it's the 11th. But most of the time we're exiting on the 10th first hour. So, but if I want to include the 10th day, then I should get the code to 11. And let's see if that makes a difference, because when we were looking here, we were actually counting the 10th in, because the bars were when we do this, that means we're the 10th, we're exiting at the close of the 10th. That means the 10th is in. So then we will do this, and we will basically include the 10th and 1 hour from the 11th. And let's see if that's is better or worse. So that's a huge difference. So we can see that actually the seasonality was correct by the day. And we can see now we're making 92. And also look at the drawdown, 1 to 20. So simple changes. Now we're entering on the first day like we were meant to do, and exiting on the last hour of the day. And we can see from the trade analysis, most Tuesdays are not doing well, but still is good. So we don't have any filter. We're actually just every day, month, we're trading 10 days of the month. So that's really good, because then we have a greater trade sample instead of doing one pattern per year. This is like 12 patterns per year. So I would rather keep September, April, and June, although they perform worse, but I will have better sample. Let me do one more thing to enhance the system. In my research, I found out that there is something between the European market and the North American market. And I'll show you what I mean. So currently, this is the British pound with the US. And if I do British pound with the Canadian, I didn't change anything, same everything. I just change the symbol. You can see it looks very good. And if I go on the other side of the globe, so this is with the Australian market, again, same everything, same rules. I'm just changing the symbol. It also looks good. Yes, we have a drawdown here, but looks good. And we can also do this with the New Zealand market, other side of the globe. Again, it's good. Of course, Canadian, New Zealand, and Australian dollars, they are highly correlated. So I expect this to be true. But now let's try it with something that is not correlated, but still not in Europe. So that's the yen. And again, same everything. And it's still good. Now, the interesting part is the other major currency in Europe is the euro. So if I do euro and USD, again, same everything. And look at that. So it looks like the European market, I don't know what's the fundamental reasons behind this, but the first week of the European market always is a down week against the East and the West major currencies. And we can see that not all of them, because if I pick the Swiss franc and let's say with the US dollar, it's also really good on the opposite side. So the Swiss franc is long the first week or 10 days of the month. And then the Swiss franc with the Canadian dollar, same thing. Okay, so now I tested all the strategies and transferred them by doing save to retester. And then we go to retester, and you can see I have, there are 17 strategies, the British pound and the euro and the Swiss franc against North America, Australia, New Zealand, and Japan. So, of course, some of them will be correlated and some of them not. But remember, we don't have a stop loss yet. And I didn't do the remove April, June, and September, which were bad months. And now I'm going to show you why. So, of course, these are the strategies we know. And also I included now up to May 1st of 2021. So some of them are doing well, some of them not so well. So British pound is doing well. The euro is not so well, but also not doing so bad. So it's like doing nothing. And it's very close now to make a new high on the New Zealand and Australian dollar and against the Japanese yen. It's not. And then the Swiss franc, it's almost getting to a new high. But I'm going to show you now the portfolio, which is what we are interested in. And remember, there is no stop loss. And I didn't change any of the rules except the Swiss franc is reversed. So the Swiss franc is long and the British pound and euro is short. So first, if we go to the Swiss franc portfolio, you can see we're not making a new high since October 2019. Till today almost, which is till end of, is this March? Yes. So till end of March, till we made a new high. But it's good, we made a new high. And we have a big drawdown here. This is 2011 and also 2008, 2007. And if we can do a portfolio correlation, we can see clearly that the New Zealand is highly correlated with the Australian dollar and also with the Canadian dollar, which is, like I mentioned before, Canadian, Australian, New Zealand dollars they're mainly minerals, precious metals, currencies, and they tend to be highly correlated. And then if we go to the euro, and we can see we're not doing anything since 2015. And finally, if we go to the British pound, we can see it's doing so well lately, and the stagnation period is here. And the correlation is again same thing, Canadian dollar with Australian and New Zealand dollar, also USD, and a little bit with euro and Swiss franc. So, but again, those correlation will not play a role because then we can divide the positions over the correlated portfolio. That will give us much better diversification. The nice thing now is if we combine all of them, we can see now that the maximum drawdown now we have is 33. And the stagnation period went down to 549 over the whole period. And now here the drawdown is about 20%. So that's a huge improvement overall. And that is what we are looking for. So we achieved a high robustness level because now we have almost 3,000 trades of the same rules and diversified over 17 pairs, although most of them are highly correlated. But if we divide the positions correctly, then we will get the benefits of those correlations. So this is an excellent portfolio. You don't need to worry about doing robustness. It's already robust. You already passed. The threshold for robustness really is about 2,500 data points. And that's done through statistical analysis. We have 4 years of out of sample. And it's doing extremely well. Every year we doing a new high, except here 2019 we didn't do a new high. But really it's still right up there where the drawdown is really low. So this is an excellent portfolio to trade. Great, you made it to the end of the video. Thank you for watching. I really appreciate it. Now don't forget, smash the like button and subscribe to the channel. Hit the notification bell so you'll be notified when a new video gets uploaded to the channel. And if you like the content, please do share the video with the other traders so they can get some value out of it. Now, if you have any questions, please don't hesitate to ask me through email, through the comments down below, or through the link below to join Discord, where I host a weekly session on question and answers, and I can answer all your questions in a, let's say, expanded, more thorough way. And as always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.